Hello all. So after covering laws related to real estate, so today we are going to start a new session on real estate case laws. As per IBBI syllabus, existing and proposed new syllabus, this chapter carries 2 marks of theory, and it is very simple and easy to score these 2 marks if you have fair understanding of these 10 to 15 cases. As per IBBI exam syllabus, these are the 10 case studies. These are the 10 legal cases which are mentioned or given in the syllabus. However, there are more 5 important case laws, out of which question may come in exam. So we'll put together 15 cases case law, and since these cases are very complicated, being an engineer, we find it very difficult to understand the content of the cases. So during last 2-3 slides of the session, today's session, I am going to tell you few keywords of these 15 cases, so that if you get any keyword in any of the questions, so you can get a hint that which case matter this question is referring to. So let us start. So first case as per IBBI syllabus is RC Cooper and Union versus Union of India. So salient points of this case is also known as bank nationalization case. So we are going to discuss relevant key points which are relevant for examination purpose, because these cases are very lengthy and there is no point in going through entire case. Only the things which are required from examination purpose, that we will discuss, and if you go through these 15-20 slides of today's session, you will be able to score 2 marks with 100% guarantee. In this case, Supreme Court has decision that property means the highest right a man can have to anything, and includes ownership, estates, and interest in corporeal things. Corporeal things means tangible things like trademark, copyrights, patents, courts. Court has included all type of properties which are tangible into these cases. Second case is Sorab D. Talati versus Joseph Michem, 1949. So in 1949, Small Causes Court of Bombay for the first time approved investment theory over comparable rent theory to fix standard rent in case of rent control premises. Return or yield from gilt as securities is being made considered as basis for determining the fair return to the landlord for his investment in land and building as under. So in case of freehold land, court has decision that 1.5% return is 1.5 return, that is more than the average yield on long-term government security, has been approved as fair return on land investment. So in case of freehold land, court decision that a return which is 1.5% over average yield of the long-term government security is reasonable for doing valuation using investment theory. So in case of freehold building, the extra return over and above average yield of long-term government security is 2.5%, is considered to be as a fair return. However, in case of leasehold property, additional 1% extra yield in both of our cases, freehold land and freehold building, is considered to be fair by the court. So that means in case of leasehold land, the fair return is 2.5% above average yield of government securities, and in case of leasehold buildings, 3.5 excess return over average yield on long-term government security is fair enough. So this case is very important, and 1 mark theory question normally come out of this case study, this case law. Third important case law as per IBBI syllabus is Commissioner of Wealth Tax, CWT, it is also known as CWT, versus P.N. Sikand, 1977. So in this case, Supreme Court held that in case of lease with sharing of 50% unearned profit with lesser. So I have highlighted keywords into it: 50% unearned profit with lesser. value of leasehold interest of assessee in the land for the purpose of wealth tax assessment, the price would have to be reduced by 50% of the unearned increase in the value of the land, which is to be diverted to lesser considering hypothetical sale on the valuation date. So many a times a lease deed has a clause of sharing of unearned profit. So if that clause is there, so this case is relevant for those leased property into which unearned sharing of unearned profit is considered. So keywords are, if in any case in any question 50% of unearned profit is mentioned and wealth tax is mentioned, then you should remember that this case is pertaining to Commissioner of Wealth Tax versus P.N. Sikand. Case number 4, Wenger and Company versus DVO. It could be full form also, District Valuation Officer, 1978. So Delhi High Court held that in case of acquisition of a property which is a mix of self-occupied and rented, self-occupied portion should be valued with market approach, that is sales comparison approach, and tenanted portion should be valued with income approach, that is capitalization approach. So these two approaches, market approach and income approach, we have already published a full series, five lecture series in our previous session, and link is given in the description box given below. Then fifth real estate case is Jawajee Nagnathan versus Revenue Divisional Officer. So in this case, the court held that basic valuation register prepared and maintained for the purpose of collecting stamp duty cannot form foundation to determine the market value of the property under registration. So register maintained by registrar for collection of stamp duty, circle rate register, has no relevance for valuation. That is, the register maintained for collecting stamp duty has no statutory base or force. Sixth case is Chimanlal Hargovinddas versus Special Land Acquisition Officer, SLAO. Sometimes examiner may write SLAO instead of writing full form of Special Land Acquisition Officer. So please remember. So in this case, the court held that in reference to section 18 of Land Acquisition Act. So this section 18 of Land Acquisition Act we have already discussed in previous sessions on Land Acquisition Act. There is a full presentation. So award given by Land Acquisition Officer, that is collector, is merely an offer and not a judgment. The court cannot take account the award unless the material relied upon the land acquisition officer, plus and minus factors considered while determining the market value, is produced and proved before the court. So this is these plus minus factors we have already discussed in land acquisition chapter. You please refer that session if you are not clear about this thing. Then case number 7 is Controller of Estate Duty versus Radha Devi Jalan, 1968. So in this case, the court held that in case of building which are under possession of tenants under Rent Control Act, so keyword is Rent Control Act, where tenants cannot be evicted and rent payable cannot be enhanced, the only appropriate method of doing valuation is to capitalize annual rent by certain number of years purchase. So there will not be any reversionary value of the land. In that case, the method of valuing land and the building separately and adding up to the value would be improper in such cases, because that would ignore the impact of Rent Control Act on the value of land and the building. Because Rent Control Act is applicable, so that land and building owner will never get back. Only he has a right to get a perpetual rent from the property. So that perpetual standard rent is required to be capitalized to arrive at the valuation of the property, and this is the judgment of this case, case number 7. Case number 8, Commissioner of Income Tax, it is also called CIT versus Ashima Sinha, 1968. In this case, the court approved tribunal's decision to allow 10% deduction in value to account for sale of undivided share of the property. Or court also held that in the method adopted by the valuer, land value is calculated basis two factors as under: the amount included in yield method that is present value calculated by discounted cash flow of each inflow during certain period, and the amount included during revisionary method. So this is a novel approach basically, but it's a wrong approach in fact, right? But court has decision this thing. So revisionary value is the value calculated after expiry of the certain period. So if 10% reduction keyword is mentioned in the case, so this examiner is asking about this case study basically, this legal case. Next real estate case is important. Real estate case is Commissioner of Income Tax CIT versus Anup Kumar Kapoor and others 1980. Here the court held that the valuer calculates value of the property using two factors: present value of future cash flow using discounted cash flow, yield or rental method, and also present value of land after expiry of certain period using revisionary method. So these two methods we have already covered into income approach. So future cash flow, present value of future cash flow using discounted cash flow plus present value of revisionary value of the land. So the Kolkata High Court rejected the concept of revisionary value of land. So as per this case, the concept of revisionary value of land was rejected by the court. The above case was tenanted property, and obviously therefore land reversion was not possible. Hence its value could not be added. So in this particular case, the court did not allow to add revisionary value because the property was tenanted. In case number 10, as per IBBI syllabus, is Commissioner of Income Tax versus Vimlaben, Bhagwandas, Patel 1979. So the rate of capitalization should not be unreal. So in this case, the court held that the rate of capitalization considered for doing valuation using income approach should not be unrealistic and must have relation to the commercial rate of return, after taking into consideration the various constraints and insecurities in the property market. The court held that in its opinion, the reasonable and appropriate rate of capitalization would be 8.33 times the net average annual income, which is nothing but a yield of 10% per annum on the investment of capital in this property. So here in this case, the court decision that 12% of return is okay. So there are also few important case studies which are legal cases which are not mentioned in IBBI syllabus, but sometimes a question may come out of these, or application of these case laws may be required to be done in various tricky case studies as well. So case number 11, KP Varghese versus ITO. So as per this case, since valuation of capital asset is generally a matter of estimate based to some extent on guesswork, fair market value is bound to vary from individual to individual. This valuation variance up to plus minus 15% is acceptable and normal. So as per this case, the court held that valuation variance of 15% is acceptable and normal. Next important case is Gold Coast Trust Limited versus Humphary, judgment by English Court 1949. So in this case, the court held that if valuation of an asset is difficult, the best valuation possible must be done. The valuer can never be absolutely accurate, neither expected nor demanded. The valuer is not supposed to give absolutely 100% accurate valuation. The valuation is not an exact science. So these are the key words for remembrance. Next case is Hayes Will Trust versus Hayes and others 1971. So considering all possible and relevant factors, neither lowest nor highest valuation but mean is the valuation to be considered by the valuer. This is another court decision given by the court into this case. So court held that valuer should consider mean price. So different court cases have given different decisions. So some of the decisions might be contradicting to each other, right? But here in this case, court held that mean price valuer should consider mean price of the property. Next case is VC Ramachandaran versus CWT Karnataka. So in this case, valuation of an asset is done basis multiple factor. It is not always good to accept the lowest valuation amount amongst all the methods. If higher valuation among all valuation appear to be reasonable one, the same has to be accepted. So in this case, the court decision that in case valuer is doing valuation of a property using multiple methods and different methods are giving different valuation. So it is not always good that a valuer should follow conservatism principle and go ahead with lowest of the valuations. In fact, if higher of the 3-4 methods, valuation is appear to be reasonable with suitable justification, so valuer can consider higher valuation as per this court ruling. And the last important case is Subh Chaudhary versus IAC Kolkata. So in this case, the Kolkata High Court held that valuation of fully tenanted property should be made on the basis of capitalization of rental method. So these are the 15 important cases. So just to have a quick remembrance of these 15 cases, let me share important keywords with all of you, so that if you will remember those few keywords, you will be able to identify that examiner is asking about which case study. So this is the case. So first case is Rustam C. Cooper versus Union of India. So if examiner is asking for this case, then keyword for this thing is bank nationalization cases, and from Cooper you may remember corporeal things. So Cooper case is related to corporeal things, and please remember bank nationalization case. So if any of these two words is given in the question, that means examiner is asking about this Rustam C. Cooper versus Union of India. So we have already discussed all these cases, but I am giving here you the keywords just to identify which, if this keyword is given in the question, so you can identify which case study, which real estate case law examiner is asking about. Then next is Sorabji D. Talati versus Joseph Michem. So here this case study talks about standard rent, investment theory, standard rent, gilt as securities, and 1.5, 2.5 returns over gilt security rate of interest. So you can remember that Sorabji S and here standard rent S. So you can link up these two, remember that if these keywords are there, then Sorabji examiner is asking about Sorabji case. The next case is Commissioner of Wealth Tax versus P and Sikand. So if examiner is talking about unearned profit on lease property, then it is talking about then Commissioner of Wealth Tax. So unearned profit and wealth tax, so these two are interlinked words. Please remember, in case of unearned profit, so wealth tax case study, which is versus P and Shankara, is to be marked tick okay in the exam. So in case of Wenger and company versus DVO, so here if examiner, if district valuation officer keywords are given in the exam in the question, then you please click on this case study. Then examiner is talking about this case, Wenger and company versus DVO. So district valuation officer keyword will be there in the question most likely. So other keywords that could appear in the question would be mix of self-occupied and rented properties. Self-occupied, in case of self-occupied, market sale comparison approach is required to be done for doing valuation, and in case of rented property, income or capitalization approach it should be used for doing valuation. The next case, Jawajee Nagnathan versus Revenue District Officer. So here in this case, if keywords are register maintained by registrar for collecting stamp duty. So if collecting stamp duty keyword is given in the question, that means examiner is asking about this Revenue Division Officer versus Jawajee Nagnathan. This case examiner is asking about. So Chimanlal Hargovinddas versus Special Land Acquisition Officer, SLAO. So this is another case. So if question is talking about award by land acquisition, this is the only case. So if examiner is talking about award, so that means the case is related to land acquisition. So please link up these two words for remembrance. Then controller of estate duty versus Radha, Devi, Jalan. So here if examiner is asking about keywords are Rent Control Act, building under tenant possession, rent capitalization method, then examiner is talking about this case, controller of estate duty and Radha, Devi, Jalan. So if examiner is talking about 10% reduction in value of undivided share, revisionary value of land is wrong, if these keywords are given in the question, that means examiner is talking about Commissioner of Income Tax versus Ashima Sinha case. In case of, if keywords are in case of tenanted property, land has no revisionary value, so that means examiner is talking about Commissioner of Income Tax versus Anup Kumar Kapoor and others. If examiner is asking about rate of capitalization, commercial rate of return, then it is the question is pertaining to legal case of Commissioner of Income Tax versus Vimlaben, Bhagwandas, Patel. So if question is talking about 15 plus minus 15% valuation variance, then this case is pertaining to KP Varghese versus ITO. If valuation is not a science exactly, and valuer can never give absolute valuation, correct valuation, so these keywords are given in the question, then please tick mark on gold cost trust versus Humphary. So if examiner is asking about mean price, if this keyword is given in the question, then we have to mark OK on, click yes on select case study, legal case of Hayes Will Trust versus Hayes and others. And if examiner is asking about talking about multiple methods, higher valuation, out of which multiple methods, then the question is pertaining to legal case of VC Ramachandaran versus CWT. And if a question is talking about or keywords given in the question are fully rented property, capitalization of rental method, then the question is talking about case of Subh Karan Chaudhary versus IAC. Thank you very much for watching today's session. So before I am going to tell you what we are going to start in our next playlist, let me request you please subscribe to the channel if you have not done till now, and click on bell icon so that you will be notified about upcoming videos. So this is the syllabus of general law which we are going to discuss in our upcoming playlist. We will try to cover this entire topic into maybe four or five sessions. So as per existing IBBI exam, so it carries 10 marks of theory. However, with effect from 1st July 2022, it will carry 9 marks of theory out of 100 marks. So thank you very much.